Hi friends, welcome to my YouTube channel SS Analysis. First of all, I would like to tell you that if you are watching this video first time, subscribe my YouTube channel to see my more upcoming videos on analysis of different commodities and equity indices. And second important thing is to watch this video till its end to understand this thoroughly to take your decision. Your one like will motivate me to be regular in working more hard for you. So friends, this is a monthly chart of S&P 500 futures where I have conducted my study on previous two market crashes to predict the upcoming directional moves in S&P 500 futures after a plethora of escalation efforts on tariff trade war fronts. So friends, do you think that anything constructive has been happened on the tariff trade war front? Whether the two major economies of the world, China and the US, have successfully resolved this tariff tussle or still they are suspicious about their efforts. Now let us see what ensures that global equity markets are still under the fear of bearish pressure during the upcoming weeks. What are the parameters which defines the real development or the success of the efforts made to resolve this tariff trade war? Because I find that the strengthening gold define the success of escalation efforts on tariff trade war front. On analysis of the movements of gold futures in different time frames, I find that the gold futures were ready to bounce from the current levels because I find that most of the major equity indices are still under the bearish pressure. We will shortly discuss about the movement of gold futures, how they define the real scenario behind the escalation efforts to resolve this problem. First, let us check the current movements of major world indices, that how the major world indices have come under the grip of bears since both countries have been constantly making efforts to resolve this tariff trade war tussle. On analysis of the movements of gold futures in different time frames, I find that the gold futures were ready to bounce from the current level. I find that the strengthening gold futures define that developments on tariff trade war front looks not convincing enough to ensure the stability of positive moves from both the US and the China, despite a plethora of promises till Tuesday. US President Mr. Donald Trump insisted on Tuesday that trade talks with China have not collapsed and called the widening US-China tariff war a little squabble, even as this administration reduced 25% duties on all remaining Chinese imports. Explaining on a stream of optimistic early morning tweets about the state of talks, Mr. Trump told reporters that he has a very good dialogue going with China and touted his extraordinary relationship with Chinese President Mr. Xi Jinping. We have a dialogue going. It will always continue, Trump said. But we made a deal with China. We had a deal that was very close, but then they broke it. Mr. Trump appeared to downplay the scope of the trade war, which could deal to tariffs this summer on all trade between the world's two largest economies, raising costs and disrupting supply chains across the globe. Nobody knows the quantum of devastating impact of the moves and the counter moves from both the countries, not only over the profit margins of the companies who trade across the US and China, but also from the other parts of the world too. But steady gold is evident enough to ensure the growing uncertainty in global equity markets during the upcoming weeks. According to Raymond James, policy analyst, equity markets will need to drop at least 10% for President Trump to talk the prospects of a G20 timed deal with China. Attention has turned to the June 28-29 summit as the next pivotal moment for talks. Mr. Ed Mills wrote in a note, on Monday, Trump confirmed he will meet with China's President Xi Jinping during the event in Osaka, Japan. In the meantime, we expect threats of escalation by both sides in an effort to build negotiating leverage, Mr. Mills said. I find that this entire scenario is evident enough to ensure a bullish upward move in gold futures to test the levels of $1,333 during the upcoming weeks. Gold bulls look too confident to move upward since the Chinese President Mr. Xi Jinping denounced as foolish foreign efforts to reshape other nations as he pushes back against US-made demands. To think that one's own race and civilization are superior to others and to insist on transforming or even replacing the other civilization is foolish in understanding and disastrous in practice, Mr. Xi Jinping said on Wednesday at the opening ceremony of the Conference on Dialogue of Asian Civilization in Beijing. He made no direct comment on trade dispute or the US in his remarks. So friends, I find that the gold bulls look too confident, and I find that a sustainable move which indicates a sharp upward move in gold futures today, where a consolidation will attract more bulls to go long to achieve the levels of $1,333, where they will find their first resistance due to the growing uncertainty of economic slowdown. So let us have a look at the movement of different equity indices after the recent development on tariff trade war front. Friends, here you can see a daily chart of S&P 500 futures where the 20 days exponential moving average has come below the 20 days moving average, and 50 days exponential moving average is below the 50 days moving average, whereas the S&P 500 futures below all these moving averages. And currently I find that the current position of all these moving averages are evident enough for increasing bearish pressure in S&P 500 futures, which may result when the S&P 500 futures will move below the 200 days moving average, and I find that a move below the levels of 2767 will confirm the continuity of a downward voyage in S&P 500 futures, which may continue up to the levels of 2510, where a downward move below these levels will confirm more steep downward moves in S&P 500 futures. Now let us have a look at the movement of Indian indices. This is a daily chart of Nifty 50 where you can see that how selling every upward move, and since the Nifty has closed at the lowest end of this warning zone, which indicates further downward move in Nifty is likely to continue if the Nifty breaks the 200 days moving average in a downward move. I find that a move below the levels of 10972 will attract more bears to go short in Nifty, where Nifty is likely to remain under bearish pressure, where we may find Nifty below the levels of 10,000 during the upcoming weeks. So friends, thanks for watching this video. If you like this video, don't forget to share this video with your more and more friends. Thank you.